The EV price wars continue heating up. Over the weekend, Tesla announced more than $1,000 in price cuts in China, as well as more easy financing terms over the next few years. BYD, meanwhile, announced price cuts of its own. All of this makes EVs more affordable to customers, but brings down profit margins industry wide, which I'll share with you in this video. But looking at these two EV stocks, Tesla and BYD, which one is the better buy? I'm going to answer that question in this video, comparing the two on critical financial metrics like revenue, profit margins, cash flow, return on invested capital, and of course, valuation to determine which one is the better EV stock, according to my opinion. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So looking at revenue growth over the last 10 years, you'll notice that BYD took over here in better revenue growth about 2021, I would say. You can see its revenue growth spiked above Tesla in several quarters here in 2021. And then Tesla did a little bit better in early 2022 and late 2021. But then BYD retook the lead here and has maintained better revenue growth than Tesla since late 2022. And that lead is apparently accelerating here with 25% revenue growth for BYD in the latest quarter compared to just 7.85% for Tesla. BYD's recent monthly sales have also been better than Tesla's most recent quarter. You can understand why Tesla is needing to offer bigger price cuts in China to compete with BYD and others that are offering lower prices and have greater government support than some of the American car companies, Tesla included. GM actually just announced that it was going to take a $5 billion loss on its China segment because it's losing so much market share to Chinese competitors like BYD. Comparing the operating profit margin, you see that BYD has had the lead against Tesla for the better part of the last decade, save for a brief moment in 2022 and late 2021 when automakers in the US faced significant supply chain shortages, so they produced fewer vehicles, and that circumstance in those few quarters led to a huge advantage for Tesla, and it benefited with greater sales and greater profitability. But those conditions have reversed now, and automakers have begun or returned to full production. And Tesla's sales in the United States are not doing very well. It's losing market share in its most important market, the state of California, and other areas as well. Meanwhile, BYD's operating profit margin has been relatively flat over the last decade. You don't see very much improvement, and that has advantaged Tesla. Over the last decade, it has improved its operating margin up to 8.5%. That's from a negative 6% in 2015. Tesla's done an excellent job improving profitability, primarily by sticking to its smaller vehicle lineup. It hasn't really updated the Model 3 and Model Y, the highest selling cars in its lineup and some of the highest selling cars worldwide. It's been selling the same car for so many years, and that allows you to get better and better and better at production and lower your cost as you learn how to produce these vehicles at lower price points. But it has the offsetting impact of hurting your demand for sales because you're selling the same model. There isn't a new model to entice consumers to upgrade when they already have a Model 3 or a Model Y. Why would they want to upgrade to a newer model? So there's the give and take between that decision. Do you want to stay with the same model and produce it over and over and over again, which allows you to generate lower cost and gives you a cost advantage? Or do you want to keep updating your lineup with newer models, which generates increasing demand from consumers? That's an interesting choice. Tesla has chosen not to update its vehicle lineup. It only recently tried with the Cybertruck, which is not doing very well. And I'm not sure if they're going to come out with the lower priced model in 2025. They've kind of talked about maybe they will, maybe they won't. Um, they've kind of de emphasized that and tried to get investors to focus more on its driverless car ambitions and focus less on EV sales specifically. And so that's a curious decision there. And remains to be seen the impacts of that decision longer term. Cash flow from operations favors BYD as well, with the peak performance levels of $24 billion in cash flow from operations in one quarter. That exceeds, if we look back at Tesla's cash flow from operations generated throughout the last 5 years, in one quarter, BYD generated more cash flow than Tesla did in those 5 years. And BYD has done that for several quarters, generating huge cash flow from operations. But in the most recent quarter, negative 1.971 billion. Volatile business, right? So you see these dips in cash flow from operations for BYD, where Tesla's is more stable over the last decade. Return on invested capital, these two are very closely matched here at 18.2% for Tesla with 18% for BYD. Tesla and BYD showing improvement in this metric, but Tesla showing better improvement than BYD. You can see at 2015, BYD had a bigger lead against Tesla, and now in 2024, they're almost tied with Tesla having the slight advantage. And finally, I wanted to compare these two on valuation, and I chose to use the price to earnings ratio. And looking at this metric, Tesla stock is almost 5 times as expensive as BYD. Tesla's trading at a very expensive price to earnings of 97, while BYD is trading at a more reasonable price to earnings of 20. So they're closely matched across the board on several of these critical metrics. I considered BYD demonstrating better revenue growth, Tesla demonstrating better improvement in critical metrics like profit margin and return on invested capital. And then cash flow from operations favors BYD. And then you have to look back and zoom out and look at the philosophy here. Tesla choosing EVs only, while BYD also sells hybrids. I feel hybrids are an excellent choice if you want to increase fuel economy and you want to increase or decrease the impact humans have on the planet, the negative impact. I think hybrids are an excellent choice. I think EVs need huge improvements in technology, in charging technology, to become more successful more broadly. They are effective for a small percentage of the population that can charge at home overnight. But for the rest of the world that doesn't have the ability to charge at home overnight, and especially for some that use electric vehicles for, working for Uber or Lyft, electric vehicles don't make sense, right? Hybrid is a lot more attractive in those cases. So it's an interesting choice here. But if I had to pick one of these two EV stocks, I would go with BYD because of the significantly lower valuation against Tesla. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.